The bulls ruled the screen throughout the entire session, and we were firmly in the green on the back of all of that global news, which kept our markets afloat. And it wasn't just the benchmarks which soared in today's sessions. We also had the broader market, which saw a good run, but by the end of the session, it wasn't too much of a fireworks, higher by 1% for the mid-cap index, for the small-cap index also notching up by 0.7%. All of your sectoral indices were in the limelight on the upside, led by capital goods. You also had metals and realty, so that means high beta also participated in today's rally, and banking not left behind. So some of the index gainers included DLF. Tata Steel also saw a splendid move today, 5.5% is how that counter panned out. ICICI Bank was back in flavor, and L&T also featured on the list. But let's focus in on some of the stocks which didn't hold up in today's session. The shares of oil marketing companies, most of them fell in trade today after Oil Minister Jayapal Reddy dashed all hopes of a hike in fuel prices, at least for the time being. Now, he went on to say that hiking diesel prices requires political consensus, something that the government is currently grappling with.
There are no immediate proposals in regard to the prices of various oil products, including petrol. We are, of course, facing a tremendous crisis of unprecedented magnitude. However, there are no immediate plans. Our companies in all will lose around that huge figure called nearly 2 lakh crores. I cannot hope to wipe out the entire deficit.
And these comments from the oil minister came as a big shocker for most of the oil marketing companies. Refiners may lose as much as 2 lakh crore rupees, which will not completely be compensated by the government. Here's more from R.S. Batula, the chairman of IOC.
Indian Oil is losing currently 16 crore rupees per day. We had lost 950 crores in the first up to June, and thereafter we have lost in the last 1 month. Maybe this 16 crore continues for some time. It may be another 300 crore. What I can admit that the under recoveries on diesel have also been increasing. You see, the borrowings are around 88,000 crore. They had gone to 90,000, and since the last tranches of the under recoveries which were due in last year, they have already been paid by 31st August, and we haven't received the sanction for the under recoveries of the first quarter. So this borrowings will be going up now. We have a deficit of more than 5,000 crore rupees every month.
Meantime, Kirit Parekh, expert oil and gas, says that raising the diesel prices in one shot will be a prudent move, as it would lead to lower inflation rate in the long term. Let's hear him out.
Unless you reduce the under recoveries, the fiscal deficit goes up, the monetary policies would be affected. You would have to pump in more money into the system, and you would lead to much higher inflation than what you would get by merely raising diesel prices now. We find that if you were to raise the diesel prices completely now in one shot, yes, you will get higher inflation in the next few months, but over the next 2-3 years, your inflation rate would be much lower than what it would be if you don't do anything. From a strategic point of view, it would seem to me that you're no go but to raise price of diesel.
Focusing away from that to some of the other stocks which were on everyone's radar, Mahindra Eugene, take a look at the kind of price action you saw today. Its subsidiary has formed a joint venture with Sanyo Special Steel and Mitsui, and buys stake in the subsidiary Navyug Special Steel for 129 crore rupees. Ken India, it was a brokerage rub-off that really added fuel to the stock price. Bank of America has added the counter to its model portfolio, saying that it's likely to report a 31% jump in its earnings. Apart from that, GVK Power shot up as one of its blocks is being reviewed by IMG, which was allotted to the company in 2008. And away from that, it's certainly day 2 of the Interministerial Group's review of mining progress across captive coal blocks. And the pressure on most of these private steel players is only intensifying. After all, it's their last chance to explain their stand, else they will be running the risk of their blocks being deallocated. So the managements of Reliance Power, Tata Power, Hindalco and DP Power will make presentations today to explain their insufficient mining. Remember, the Coal Ministry will take a final call on coal block cancellation once the IMG presents its recommendations by the 15th of this month.
We have informed the IMG that the coal production at Mohar Moharam-Lori extension coal blocks has already commenced. We have also told them that coal production has started ahead of schedule. Plus, we also said this is the fastest coal production ever achieved for any greenfield project in this country till date. As far as the end-use plant is concerned, we informed them that Sasan is the end-use plant and which is going ahead of schedule. The first 660 megawatt unit would get commissioned in December, which is 4 months ahead of the bid schedule.
The major reasons of delay was land acquisition, forest diversion clearances, and there's a moratorium which was imposed for environment clearances. Then there was a court case on the land acquisitions. So these are some of the issues. We are expecting maybe within 1.5 years' time we should be able to start our production. But again, the critical link is forest clearances and the mining lease.
And some of your divestment candidates also spurted in today's session, the likes of an MMTC, Hindustan Copper, Neyveli Lignite, as the focus is back on them, as reports indicate that the Cabinet Committee on Economic Affairs will meet to discuss the divestment of the government's stake in some of these companies. Apart from that, the government told LIC to stay ready for PSU divestments today, and LIC set aside a sum of 20,000 crore rupees for upcoming PSU share sales, targeting a total of 50,000 crore rupees in equity investments for FY13. NALCO also spurted on account of the fact that the government plans to sell a 12% stake in the company, and the bankers have already submitted their bids in order to manage the issue, the deadline being 27th of September. In the pharma pack, you had Aurobindo Pharma that got a good shot in the arm as it got a final US FDA approval for 2 hypertension drugs. Apart from that, you had some of the index losers, nothing to really complain about on the fact that most of your counters did very well. So you had 48 out of 50 stocks on the Nifty, which held up in the green. On the losing side, it was only BPCL, which was weak on account of the negative news. Apart from that, Ranbaxy C2 turned a bit soft. But all in all, it was a fairly steady day of trade. Let's find out how the F&O activity shaped up. Who better than Navneet Saluja, who joins in from our research desk with the latest. Navneet.
Well, Awan, it was a good trading session today. If you look at the closing of the September futures, they closed at day's high, so that's quite positive coming in there. Closed at about 52.62 with about 20 points premium to the spot Nifty. Huge amount of builder was seen at the futures side. So the Nifty September futures, they added about over 21 lakh of shares in today's trading session. On the option side, the most active strikes during the day were 5,400 and 5,300 call strikes, and you also had 5,300 and 5,200 put strikes which were active in today's trading session. The Nifty PCR towards the close stood at about 0.96, which increased from yesterday's closing. Well, if you look at the open interest side, a lot of profit booking was seen on the call strikes like 5,200 and 5,300, which shed open interest, and 5,600 call added about 8.7 lakh shares. On the put side, a lot of writing was seen at 5,200, which added about close to 12 lakh shares. You also had 5,300 put strike adding about over 17 lakh shares. On the stock futures front, a lot of long positions were being built up today. So from the Nifty side, you have Tata Steel, DLF and Tata Motors, where a lot of long positions were being built up in these counters. You also had ICICI and INFI, which were up and about in today's trading session. So fresh longs were seen there, and Reliance and L&T were up in today's trading session. Longs were seen there as well. From the mid-cap space, you had Wellcorp and Bharat Forge, which did well for themselves. So fresh longs seen there. And you had United Spirits and HPCL, which fell in today's trading session. So you saw short positions being built up on these two counters. In terms of participation, we did about over 1 lakh crore of turnover on NSE by the end of the day.
Okay, that's how the F&O activity panned out. Many thanks, Navneet, for giving us that perspective.